With mortgage rates exploding in September, I thought that things would have slowed down, but the numbers say otherwise. In this video, now that all the numbers are in, I'm going to take you through exactly what happened here in the Ocean City real estate market throughout the month of September, as well as give you my updated projections going forward. Let's go. If this is your first time checking out one of these market updates, how we handle this is we're going to talk through exactly what has happened in the past. We're going to go through all the numbers in September, the pending sales, prices, inventory, all that good stuff. And then I'm going to answer the questions I get the most in terms of what is likely to happen in the future. Let's forecast and see what shakes out. Now, let's take a look at where we were. So with mortgage interest rates increasing from 5.5% all the way up to almost 7%. Now, in some markets nationwide, 7% is the new normal. We haven't quite hit that yet in Ocean City, but I think we will be there in the next week or so. With inventory actually going up yet again, another 4%, we are still creeping up towards that 300 mark. Now, I want to pause here and talk through one important number here, not necessarily the 300 total available properties, but what we call the rate of velocity or the absorption rate, as some people call it. Basically, how fast is the inventory being gobbled up? In the month of September, we hit the lowest since I've been tracking that metric, which started mid-2021. We're down under 20%. So in easy terms, less than 20% of the total available properties at the start of September got under contract or sold through the end of the month. Now, normally we were sitting in the 30s or even 40% range. Now that we're in the 20s, not only are we going to keep seeing inventory going up, but that's telling us that inventory is sitting around a whole lot longer. As a result of that, days on market are starting to increase. It's slow for now. That may pick up over the coming months as we reach a more stable market. And speaking of stable markets, this is the big one, right? With prices, condos have officially stabilized. If we were to look year over year, we're still up 9%. That said, we are now trending roughly flat for 4 months in a row on our median sale price for condos. So that tells me that the market has reached its equilibrium there. And I wouldn't be shocked if we have peaked, as you see there in bold. Now, for the single family homes, right? We're still up 39% year over year, same exact percentage that we were last month. What that tells me with inventory rising, you're going to see this in a minute, our total months of inventory, how many homes are out there, and depending on how quickly they get gobbled up, how long would it last? We're actually higher than we've ever been in the past 2.5 years. So again, I think we may have peaked here. Now let's talk about some data and look at the visuals to really see why that is. So again, everything in blue is the months of September going back 3 years. Now we have the lowest pending sales of any September. That said, we actually took, I'm going to move my head here, we actually took a jump up over the past 2 months. When I did the last market update halfway through the month, it looked as though we were going to be trending at the lowest ever since I've been tracking this. That is lower than all the way back in April of 2020 for COVID, but we had a strong second half of September. I don't really have any rhyme or reason as to why that is. Now, whether that's people really feeling what is coming down the pike and getting into real estate versus in the stock market or whatever other positions they may have held. But that said, we did take a spike up. Now, I think that is going to be a little bit of a mirage compared to what we see going forward. But our sales held steady. And the fact that we have more sales coming in the month of September, we're going to have another strong closed sales month, likely in the month of October. So the market's still strong, right? We have gone up too much, 4% total inventory. But this is the time of year where inventory tends to slow down anyway. We are just about exactly where we were 1 year ago in total available properties. The difference, and I want to go back to the slide for a second, we are a good 20 odd plus properties short of where we were last year in last September, despite similar inventory. So if that doesn't tell you things have slowed down, I don't know what will. Now, this is what I was talking about here. The months of inventory, as you can see over the past 2 months, we took a huge spike up to the point where we're now above what is considered a balanced neutral market. Now, please don't look at this and think, oh my gosh, it's a strong buyer's market. I'm going to be able to come in and lowball these guys, but that's not going to really be how it plays out. It takes roughly 6 to 12 months for sellers to recalibrate once a market has changed. I know that sounds crazy, but that's the reality. That's proven. So I wouldn't expect to see a whole lot of actual shift in the coming months until we get to 2023, where I think reality will start to sink in. For prices, we still increased again month over month here for single family homes, but not nearly as much as we have previously. Again, still trending upward. I have not seen enough to say that that is going to level out. But again, the months of inventory that we just looked at, well over 6, and the general state of things in the economy, I would not be shocked if we start to see that plateau and even maybe come down some. Now, days on market crept up for the first time more than a day or two, really, again, since I started tracking this. So things are sitting around a little bit longer. I would anticipate that that's going to be the case again moving forward until the economy changes, which may be a ways off until it gets better. Now, condos, interestingly enough, with months of inventory here, we are looking at a steady increase, but nothing monumental like we just saw in the single family market. Now, there's a lot more property here. It's a larger sample size. So I would not expect this to trend back down. I think we'll keep creeping towards that 6 months of inventory balanced market. One thing I want to touch on here too, and some of these haven't closed yet, a couple have. There are some condos that have taken a noticeable step back, a material, I'll call 5 to 10% step back on price compared to the comps just a few months ago. So these changes tend to happen in the margins. It only takes a handful of homes to get sold at a decrease compared to the comps before that trend starts to accelerate. So despite what we're seeing here, I think we are seeing enough signs to expect that things will calm down and start to decline in the coming months. Once again here, and I misspoke earlier, this is actually 5 months running of roughly flat median price. Again, this is 12 months running average. So I would anticipate, again, as things start to catch up in this metric over the coming months, we will start to see that decline slowly. I'm going to talk about magnitude here in a minute. But days on market still roughly flat, relatively low with the condo space. Now, where are we going? And this is what everybody wants to talk about. So with mortgage rates, every projection I had tracked up to this point was expecting roughly 5.5%, maybe 6% by the end of the year. We've blown that out of the water already in the month of September, and there's still another Fed meeting in November and another in December. So it's going to be tough for mortgage rates to stay where they are unless the Fed really pivots. Depending on what sources you look at, some investors expect to pivot, most don't. I personally think rates are going to cross 7% here in the coming month or two. And I think they'll stay there, right? Inflation is still a beast. And whether you want to argue that the Fed doesn't know what they're doing, they don't have the ability to get it in under control with the methods that they're trying, but that's not going to change the fact that they're going to try, right? They've been very clear that they believe that there's a severe imbalance in the housing market and they want to correct that. So increasing the mortgage rates and having an impact by adjusting their Fed funds rate, again, they don't have the control of what a mortgage rate is going to be. But the underlying metric that they change, the prime rate, that is what's going to have an impact on the mortgage rate. So I think we're 1 to 2 years away before they really come back down. Again, I don't have a crystal ball. That is just what I'm kind of expecting here. Now, with inventory, we're still seeing a lot of homes hitting. A lot are still very overpriced. We just saw 15 homes have a price reduction in one day yesterday. That's the most I've seen in one day ever. Now, I don't look at that and think, oh my gosh, prices are coming down right now. Again, I think I've been very clear about that. That just means that the overpriced homes realize they're overpriced. They didn't get the activity, the traction that they thought they would. So they're coming down. And I know I mentioned on a couple of videos ago, there's a couple agents here who it seems their strategy is to pick up the phone, call as many people as they can and say, hey, what's your number? What do you want to try to sell for? Let's do it. I don't care if it's realistic or not. Those properties have been showing signs of coming down as well in price. So again, there's a lot of overpriced inventory out there still. I do expect that we're going to hit 300 properties by the end of October. Just the nature of how much things are slowing down, the fact that inventory is going to keep coming as it always does, right? Less so than it has in the spring and even in September, late August, but more inventory always does come. Now, if it continues to increase, I expect, again, reality to start weighing in. Now, normally this is a slow time as holidays creep up. Most buyers and sellers aren't thinking too hard about anything over the coming months. But again, this is going to be a potentially very strong recession. I've heard the word depression get thrown around, but we will have to remain to see exactly what's going to happen with that. But again, Personally, some of the clients I'm working with who would like to sell at the current prices, if things do decline, they're simply not going to sell, right? This is a second home market. As much as buyers would love for prices to come down rapidly, most sellers are going to look at that and their value proposition of, do I keep this and continue enjoying it, or turn it into a rental property, right? Turn it into a cash flowing asset. Or do I take what I would consider to be a haircut based on what I could have gotten a few months ago? Most sellers are simply not going to sell. So I don't see inventory exploding to a point where we're going to have this clearance rack style reduction. But I do think things are going to start slowing down here as inventory continues to rise. Kind of segued myself there with prices. With single families stabilizing and over 6 months of inventory, I do think we're going to start to see things slow down. Now, single family is a little tough because, again, it's a smaller sample size. When you're only selling between 10 and 15 a month, any big or small transaction can swing that metric a little bit. That's why I do my best to stabilize it and balance it out by using the 12-month rolling average and the monthly median, not the average sale price, not the mean. But we had the increase in condos that went under contract month over month. And again, that was surprising to me. I do expect things to start coming down in the coming months in terms of condo prices, because as I already mentioned, I've seen it happen. The other side of the spectrum, there have been a couple condos in the past week and a half or so that did get multiple offers within the first few days. So we're in this very seesaw-like environment where there are some properties that still obviously get multiple offers if they're priced well and in good condition. There are others that will sit and languish on the market for a very long time. Sometimes it doesn't even matter about what the price is. If the condition is not good, if it's not appealing, and we simply can't market to the right buyer, it's not going to go anywhere. And for days on market, again, I think we're going to start seeing things creep up steadily into a reasonable rate, right? We've been in an unreasonably low days on market for quite a while. Now, the biggest question that I personally have been getting recently, specifically from people looking to buy I'll say, lower priced entry level type property. Should they buy now, even if the cash flow and the return on investment is going to be good, or should they wait? I can't give a blanket answer as much as I would love to, but I'm going to give you two different scenarios. If you're looking at potentially buying a property that's in a condo complex, right, that has 25, 50, 100 units, and you feel good about the current investment, right, all the numbers check out, I would encourage you, honestly, to consider waiting, right? If there's a high potential supply that's going to be coming, odds are come the spring, when you will have not had the months of carrying costs paying the mortgage, the taxes, utilities, condo fees, there's a good chance you could get in at a better price. Now, again, if you're financing, that may be offset. If you're paying cash, I would absolutely encourage you to consider waiting, depending on what that value proposition is right now. If there's a condo building with a lot of units, again, the likelihood that something's going to come in February, March, or April is higher than if you're looking at something that's in a 2, 3, or even 4 unit building. Those you need to consider case by case. But let's say that you can get a better price coming in. You're also winning because you don't have the carrying costs. Even if the price goes up a little bit, odds are you're still going to be a wash. And I think that's unlikely that they go up. If they come down, you get the win-win of not having the carrying costs and getting in at a better, lower entry price. So that is it for this month. Again, I think this was a bit of an anomaly. September tends to be a month where we see the numbers spike. I didn't expect it like we saw here today, but nonetheless, I think that is normal, and I expect things to continue trending a little bit more the unfriendly way in the coming months. If you have any questions, feel free to drop them down in the comments. You can always reach out to me any of these methods that you see here on this screen. I appreciate you hanging out with me as always, and I will see you on the next video.